Hello there, future millionaires. Ever dreamed of turning a cool million into a jaw-dropping fortune? Buckle up, because we're about to explore a strategy that could turn that dream into a reality. We're talking leveraged ETFs, folks. These powerful investment tools can amplify your returns and put you on the fast track to financial freedom. Now, I know what you're thinking. Leveraged ETFs? Sounds risky. And you're right, there's always an element of risk involved. But with the right knowledge and a well-thought-out plan, the potential rewards can be astronomical. Imagine turning that $1 million seed into a whopping $80 million in just 24 years. That's the kind of life-changing wealth we're aiming for. This isn't about get-rich-quick schemes, though. It's about disciplined investing, smart allocation, and harnessing the power of compound growth. Over the next few sections, we'll break down this strategy step by step using real-world examples and clear explanations. Get ready to unlock the secrets of leveraged ETFs and embark on your journey to financial prosperity. Remember, this is just the tip of the iceberg. We're about to dive deep into the exciting world of leveraged ETFs and show you how to make them work for you. So stay tuned and get ready to transform your financial future. Alright, let's talk strategy. We're starting with a cool $1 million, but to really make this engine roar, we need to add fuel to the fire. That means consistent monthly contributions that will supercharge our growth. Here's the plan. Every month, you'll contribute $5,000 of your own hard-earned cash. This disciplined approach not only adds to your investment, but also reinforces your commitment to building wealth. To accelerate our journey, we'll leverage the power of borrowing. We'll secure a loan of $10,000 each month at a competitive interest rate. Don't worry, we'll discuss managing this debt later on. Now, where do we allocate these funds? We'll divide them strategically between three powerful ETFs. VO, the Vanguard S&P 500 ETF, tracks the S&P 500 index, providing broad exposure to the U.S. stock market. VGT, the Vanguard Information Technology ETF, focuses on the tech sector, offering potential for high growth, especially in our increasingly digital world. VOO, the Vanguard Growth ETF, targets companies with above-average growth potential, aiming for significant long-term returns. By diversifying across these ETFs, we create a balanced portfolio that's poised for growth while mitigating risk. Remember, smart allocation is key to maximizing our returns. In the next section, we'll explore how our asset allocation strategy evolves over time to manage risk and optimize returns as our wealth grows. Stay tuned. Time is our greatest ally in this wealth-building journey. But as time marches on, so too should our investment strategy. We're not just aiming for short-term gains here, we're building a solid foundation for lasting financial freedom. That's why we'll gradually adjust our asset allocation over the 24-year period. In the early years, we'll embrace a more aggressive approach, allocating a larger portion of our funds to the potentially higher-growth VGT and VOO ETFs. This allows us to capitalize on the power of compounding early on. As our wealth grows and we move closer to our target, we'll gradually shift towards a more conservative approach. This means increasing our allocation to the more stable VOO ETF, which tracks the broader market. This transition helps protect our hard-earned gains and manage risk as we approach our financial goals. Think of it like climbing a mountain. In the beginning, we're eager to ascend quickly, taking advantage of every opportunity to gain altitude. But as we near the summit, we proceed with more caution, ensuring a safe and successful climb. This dynamic approach to asset allocation allows us to adapt to changing market conditions and optimize our portfolio for long-term growth. Remember, flexibility and foresight are crucial for navigating the ever-evolving world of investing. Section 4. The power of compounding, watching your money make money. Now, let's talk about the magic of compounding. The secret sauce that can turn a modest investment into a life-altering fortune. Compounding is like a snowball rolling downhill, gathering more snow and momentum as it goes. Here's how it works in the context of our leveraged ETF strategy. Each month, our investments generate returns. But here's the exciting part. Those returns are then reinvested, generating even more returns the following month. This cycle repeats itself, month after month, year after year, creating an exponential growth curve that can lead to extraordinary wealth accumulation. To illustrate this, let's assume the following annual returns for our chosen ETFs: VOO at 8%, VGT at 10%, and VOO at 9%. These are just hypothetical examples, of course. Actual returns may vary depending on market conditions. However, these figures demonstrate the potential power of compounding when combined with consistent contributions and a well-diversified portfolio. The key takeaway here is this: the earlier you start investing and the more consistently you contribute, the more time your money has to compound and grow exponentially. It's like planting a tree. The best time to plant one was 20 years ago, but the second best time is today. Section 5. Crunching the numbers, from millions to a mountain of wealth. Hold on tight because we're about to crunch some numbers and witness the power of this strategy in action. Remember, we're starting with $1 million and contributing $15,000 per month, $5,000 personal and $10,000 borrowed. Using our assumed annual returns for VOO at 8%, VGT at 10%, and VUG at 9%, and factoring in our evolving asset allocation strategy, our portfolio is projected to grow significantly over 24 years. Keep in mind, these are just projections based on historical data and hypothetical returns. Actual results may vary. After 24 years of disciplined investing, our initial $1 million investment could potentially balloon to a staggering $80 million or more. That's the power of leveraging, compounding, and strategic asset allocation working in perfect harmony. Now let's not forget about the loan we took out to accelerate our growth. Assuming an interest rate of 5% on our $20,000 monthly loan, our total debt after 24 years would be approximately $11 million. However, after subtracting this debt from our projected $80 million portfolio, we're still left with a net worth of approximately $70 million. These figures illustrate the incredible wealth-building potential of this strategy. However, it's crucial to remember that leverage is a double-edged sword. While it can amplify gains, it can also magnify losses. That's why we'll delve into the risks and considerations of this approach in the next section. Section 6. Weighing the odds, the highs and lows of leveraged ETFs. We've explored the exciting potential of leveraged ETFs, but it's crucial to acknowledge the inherent risks involved. Remember, leverage is a double-edged sword. While it can amplify gains in a bull market, it can also magnify losses during downturns. Here are some key risks to consider. Market volatility. Leveraged ETFs are designed to track daily returns, which can lead to significant fluctuations in volatile markets. Time decay. Leveraged ETFs are best suited for short-term investments. Holding them for extended periods can erode returns due to compounding and fees. Debt burden. Borrowing to invest increases your risk exposure. If your investments don't perform as expected, you'll still be responsible for repaying the loan. It's crucial to have a solid understanding of these risks before diving into leveraged ETFs. Thorough research, risk assessment, and potentially seeking advice from a qualified financial advisor are essential steps to take. Remember, investing always involves some degree of risk. It's crucial to invest only what you can afford to lose and to diversify your portfolio to mitigate potential losses. Section 7. Your path to prosperity. Taking the first step towards financial freedom. Congratulations, you've just unlocked the secrets of leveraged ETFs and glimpsed the incredible wealth-building potential they hold. Remember, this strategy isn't for the faint of heart. It requires discipline, careful planning, and a healthy respect for risk. Here's a quick recap of the key takeaways. Leveraged ETFs can amplify returns. By using leverage, we can potentially achieve significantly higher returns compared to traditional investing. Compounding is key. The magic of compounding allows our investments to grow exponentially over time. Strategic asset allocation is crucial. By diversifying our portfolio and adjusting our allocation over time, we can manage risk and optimize returns. Risk management is paramount. Leveraged ETFs come with inherent risks, and it's essential to understand and mitigate these risks before investing. If you're ready to take control of your financial future and explore the exciting world of leveraged ETFs, here's what you can do. Like this video and subscribe to our channel for more insightful content. Share this video with your friends and family who are also interested in building wealth. Consult with a qualified financial advisor to discuss your personal financial goals and risk tolerance. Remember, the path to financial freedom is a marathon, not a sprint. With the right knowledge, a solid plan, and a dash of courage, you can achieve your financial dreams and secure a brighter future for yourself and your loved ones. Now go out there and make your financial dreams a reality.